All right, guys. So welcome on. I'm just trying to wait for this to load up. All right. Welcome everybody as we're coming along. All right, let's take a look at what we've got going on here. All right, cool. So welcome guys on to this live. Let's get it going. Now, with the dollar index, let's take a look at what the price has done. So we had a really good session on Friday to look at the NFPs, and let's see the result of what's happened. Now, because my charts have so many markings on here, what I'm going to do is find the one that has the least. Now, it looks like none of them are not without the least, so let's just do control. All right, so let's do this here. Control B, delete all, and let's just recap. So you know what I've been talking about, guys. So the range that we're operating with at the moment when it comes to our analysis is we're taking the range from when inflation started, okay, till we had that reversal last year. Now you can see that it's been an interesting one. I told you that the body of the candle, until it closes beneath this area, we shouldn't count out the dollar strength just yet, okay? Now, if we observe what's going on, let's go to the weekly. As I said, I do think that the dollar index will pull back at some time because we've got a liquidity gap and equal lows here. So at some point, I'm sure we should get a short. Again, the reason why, even though I know that there is a very strong long that is pending on the dollar in the near future, the biggest issue is that this movement we had when we had this strong short here, over here, let's put this here. When we had this strong short occur, the only problem is the price actually didn't return into a demand order block to do it. Even though it was inside of this range, the bodies are inside of this range, but still should have touched back into this area of demand. So we still have a liquidity void left behind. Obviously, we have this gap here, which this gap I know sometimes can throw your eyes off because there's still a wick here, so it doesn't look like a gap. But in essence, if you read this properly, the close of this bullish candle and the open of the second candle has a gap between it. Now, usually the open and close prices are just about the same or the same price. And then even with the wick here, the wick of the candle actually isn't touching the low of this wick here, to be specific. It's not touching at the close of this candle. So there's still a small gap anyway. And then beneath that, we have equal lows at 95 here. Visually is quite clear, even though the lows are not exactly equal, but they are close to. So it says 95.095 for this first candle, and this says 95. It's actually equal. They're both 95.095. I thought they were like 0.95 and 0.96. So we have equal lows here, which is near the beginning of the year of 2022. So it wouldn't surprise me that the dollar index did this, which is around the optimal trade entry anyway, and took the low of the previous year and then took off for a long. Okay. Now, because of this movement here where the price purposely didn't reach into this order block, that's the part that gives me the thought that we may actually see the price do that reversals. Now, I've been analyzing Euro USD and Pound USD, and I expect them to do intraday longs or an intra-month longs. So the dollar index will be getting weaker at that point for that to actually happen. Okay, so looking at this, the dollar index, I'm going to continue down to the daily time frame, and then let's go over to the H4. So what did we have with the NFPs last week? So the NFPs gave us this reaction here. We had a strong short. Okay, where the price actually went into is not really clear on the H4, but on the D1 it's a little bit better to see. We have a demand order block here that the price flipped into a supply zone. Now, it was officially flipped over here as soon as the price broke and touched back here, but we didn't get that full body return. So the price actually gave us one and then gave us Friday induction or Thursday induction over here. Now, I still think that there's still going to be one long left because the price is not the most efficient movement, or isn't that its most efficient movement that is done so far. So if I go over to the H4 right here and write this out here, the price actually didn't return to H4 supply. So I'm still finding that the price may want to reach above these highs, maybe let's say here, and give us a proper trigger. Now the price is still bouncing around equilibrium, but I'm thinking that most likely price will need a really good trigger to give us this short. And once it does do that, then it will be on its way down to 99 and beyond, okay? Now on the H1, what gives me more idea that the price is definitely going to do this, if I just shrink this down to where it is to represent the induction here. So let's just take this, right? Yep. So if we do that to represent that, if you see over here, we have these two highs here, which are basically equal highs. So the first high is 390. The second high is 390. So we have a pool of equal highs here and quite a few highs just nested around. So to me, even though the price is dropping right now, we've had a good reaction from the equilibrium point and the price has sold off. I don't buy this move, as in, I don't think that this is the initial short that the price is going to do. Because we have the CPI news on Thursday, which we looked at last week, right? There is a chance that the price will probably give us a reversal. It would need a good trigger, but we could end up having a long go on a little bit more. So a little bit more of a bullish dollar to about above this high, and then we go short. These equal highs are always a magnet to the price. And because we're in the H1, it's not as difficult for the price to really go and grab that. So for me, I wouldn't be surprised if the price was to do something of that sort, okay? That's just my own opinion. All right, so moving forward from there, we'll have to see what the price is going to do. Now, I want to show you a couple of pairs that I'm looking at, what my mind is on when it comes to certain pairs. Now, I really like the way the look of the major pairs are, and I think that they're in great positions to go for a long. Now, my favorite so far, I was doing a boot camp on Saturday with the Academy students, which is Pound USD. So I'm going to break down Pound USD from the beginning and just kind of give you my feel of what I'm looking for. So starting off from the monthly, even though the bias is heavily bearish, it doesn't mean that we can't have long positions going on. We have a liquidity void, at least to the high of last year, which is at 1.34. Okay. Now, on the weekly time frame, we can be a little bit more surgical. The area I'm looking at is this supply zone, which is of interest to me. Now, this supply zone was the trigger for the pound to make the lowest price point or form the lowest price point it's had in history. You know, the last lowest point was close or anything close to it was in 1985, but we had one better where Pound USD literally took that low. And since then, the price has been on a recovery kind of move right here. So anyway, if we draw this supply zone out, we can see price use this for a sell. We have these two moments where the price was supposed to return here and it didn't. When it finally did, there was hardly any reaction. We even made a better swing high or higher swing high, excuse me, not necessarily better. When the price sold off for a few weeks, there wasn't that much of a strong reaction. The price actually came back to nearby reference points. So across here, right? The price didn't even get beneath this reference point over here, which was a sign of bullishness anyway. So moving forward, the price broke above. We had the first return here. So this was the first movement induction here. And then we've had the second. Now this second one from the weekly, okay, the body of the candle has closed beneath the previous week here. I understand that. But at the same time, this low here has taken another weekly low nearby and also come back to this order block here for more liquidity. But I want you to see the order flow here that the price is still bullish because we are still forming higher lows going along, which is a sign of a bullish trend. Now, on the daily time frame, to represent this movement or what this movement represents, I can take these lines off, is actually the price has taken the low of the previous month. So any sell stops that are beneath this low of the monthly low, now the higher the time frame, when the price takes a high or a low, the more amount of liquidity will be there, okay? Because institutional money and stuff, as we always talk about, don't trade. They do have high-speed algorithms, yes, but in terms of like swing or holding positions, and not just that, but all sorts of companies that are involved in the Forex market are usually holding onto positions for a little bit longer, more, you know, for more higher time frame, monthly, weekly kind of moments. So we've had this wick here, which has taken the monthly low. If we go over to the H4, you can see the progression of the reaction. Now, for me, I think Pound USD is going to be a fantastic one. Another thing to note that I noticed is if you go back to the weekly to trace why the price went short, because I always like to do that. I hope you do that too. But I always like to look at why the price went short or why it went long. Now, the reason why the price went short here and didn't actually take the high of a previous week or previous day was, let's just stay on the time frame we're looking at, like a previous weekly high, is because we entered into a key area of supply that price formed last year. Now, this one is during the time when the Ukraine-Russia war was first in its early stages. So this supply zone here had a lot of selling liquidity, and simply when the price came here, whatever was left of that in that area price, as soon as it reached there, didn't need any hard work to start pushing short again, right? So coming back to the daily time frame and the H4, because the price formed this movement, if I go to the H4 and we look at this weekly high, we actually have another set of relative equal highs here. So if I pull this up and I drag this over here, so if we pull this up over here, let me pull this over here and delete this. So you can see that these equal highs over here is one of the major targets that I have for this trade. Now, I actually think that Pound USD is going to do a bit more than that, because looking to the left here, like I was discussing with WGA students, we have equal highs over here. We have two equal weekly highs right over here. And we also have a gap that has been formed over here. We have a liquidity gap over here. So these two features, along with these other equal highs, makes me think that we might even see the pound versus the US dollar come back to fill this last liquidity void, which when the price actually sold off this time, it was a bit of a nonsensical move to me, because the price should have filled this liquidity gap. Because I remember when the price was here and it didn't come back. So we might actually see the price go to 140 again. We'll see. So anyway, coming over to the D1, right over here, and then to the H4, okay? So having that in mind and seeing what the price has done, okay, going over to H4, then H1, let's just see what we've got going on, all right? So having this in mind, for me, Pound USD is a great opportunity to grab a short very soon. Now, in this case, the order block of focus is this second one here, because we have nested demand zones within each other. So we can actually use this as a reference point. Now, the swing low formed from the NFPs, let's take a deeper look at this. So for the daily move, this is Thursday's low, and this is where the price dropped beneath before coming back above here. Now, the last swing low before this movement happened is here, swing high, and there's another swing high over here. Now, because we need breaks of market structure in order for the price to move, I'm going to turn the attention away from the swing high formed in Asia here and focus on the last visible swing high until we get to a daily high back up here. Now, when you map this out, I want you to understand the concept here that I'm trying to deliver, so you can understand what we're looking for as a trade. So for Pound USD right here, when the price wicked over to this high right here, we didn't get a body close, we had a wick closure. So since we had a wick closure and not a body closure over here, right? When the NFP news came out, and if you see over here, if you want to see the timing, I'll show you. This is the NFP news. This is at 3:30 server time. For us, it's 2 hours behind. So this is 1:30 right now. So over here at this 1:30 news moment here, the body of the candle has closed above this high, right? So we have a body close right over here. And then we see the price moving higher. But at least we know that we have a break of market structure with the news. Now, I have one of my alarms set. I think that's for 1 second. Let me just fix that up. Sorry. Let me just take that alarm off so it doesn't disturb you guys. All right. All right. So when it comes to the price action that we're looking for, right, with these pairs, for me, one of the things to consider is the order blocks here. Now, we have actually a liquidity gap here, which is interesting to talk about, and we can have a discussion about. But just taking it from the H1, the market structure break that we had was formed with the news. Now, whenever we have this distribution of liquidity, and we have a break of market structure, we need a matching return to the origin. Now, in this case, because the break of market structure happened with the news, then we're going to still need the pullback or the return to origin, which is what I'm expecting the price to do. Now, if I pair that with the dollar index analysis here, which currently is pushing long, the dollar index at the moment, even though we know that there's a short incoming very soon, hasn't reached any area of significance enough to produce a short. So my thing is that I'm aiming for the price to take the weekly high, okay, enter into a good area of supply liquidity, like around this area here, take that weekly high and then give us a short. Something like that would be a great trigger. An even greater trigger would be if the price decided to take the monthly high, so the high of July, and then push short. Those kind of triggers here, if we see that as, you know, intra-month analysis or intra-market analysis, pairing the dollar index with pound USD, then that would be a great kind of two situations of scenarios of analysis that will help us to get a very good view of what the price is trying to do. Okay, so for me personally, I expect the price to give us one more short into this area here and actually take the low of the NFP movement. So if we follow through the range now, if I go from the swing low to the first swing high here, the price didn't even return to equilibrium. So at the moment, the market is operating in a place of discount or premium pricing for buying. So the actual buy entries are not there yet as of yet. If I follow the range though, okay, well then this range wasn't created until the news, basically the day ended. So we couldn't use this as a range to go by. All right, but if we use this range, which happened before the news, okay, with the first pullback, the price actually rested at 38.2 and took off from there, which is a retail trading level. So I suspect that beneath or around this area, there's going to be a lot of stop losses that, you know, the market would want to go for to stop you out and then actually come to do the real move. So this is what I'm looking for. And then from here, we ride for a long. Now, because of this gap that's on the 30-minute, you know, there is a chance the price might even push lower. So either if you, in this case, I don't like wide stop losses, but because the risk to reward is so great, on the M15, what you may want to do, and this is the time frame I usually enter from or lower, is try and capture the lowest down entry you can. Now, if we follow the range, because what I do want to see actually happen though with pound USD is if pound USD's high of Friday can be taken, that might be a good trigger for sales from today until maybe Thursday when the CPI news comes out. And then from that CPI news moment, that's when we start to see the price, you know, making its way for some moves, right? So having that in mind, this is what I'm actually looking for trades, okay? So this is ideally where the range of entries is what we're looking for, or what you should be looking for, okay? So that's pound USD. Now, another one that I'm interested in as well is actually USD CAD as well. So if I go over to USD CAD, now USD CAD and oil have had an interesting kind of correlation going on. So I haven't really, you know, been looking much at USD CAD because it's been acting very differently from other pairs. But I still spend the time to make sure that I, you know, give it a look when it's time to look at what we're looking at anyway, when it comes to analyzing. So let's do this here. All right, so with USD CAD, I like it in the fact that USD CAD has taken the high of the previous month. Now, whenever I analyze USD CAD, I like to pull up oil as well, because if you've noticed by now, and if you haven't, that's fine also, that USD CAD doesn't have the same kind of correlation with US dollar pairs as, you know, as you might expect. So if I take this over here, all right, and we take a look at what's going on. So if we look at US oil from the D1 perspective here, and we look at what USD CAD has been doing, over the long term, you'll see that there is an inverse pair correlation. Sometimes they go moving the same way, but most of the time they are moving in an opposite pair correlation. And this is simply because of oil's relationship to Canada as one of their major exports. So if oil is doing well or the price of oil goes long, then USD CAD goes short because Canada gains more currency strength because the export price that they sell at will be higher. Okay, so the currency will get stronger. So a lot of times you see this kind of USD CAD, US oil pair correlation relationship. Now, at the moment, I do think that USD CAD is definitely going to give us a short, even though there's a very strong long incoming also. It's just a matter of kind of observing what the price is doing on every time frame to figure it out. Now, pretty long while ago, I did talk about this movement here, and it seems to have played out pretty well. We had this reaction here. Now the price has come back to the high where the spike is here initially. Excuse me. But I still, because of the US dollars weakening, that's probably going to come into play soon. I'm still thinking about, USD CAD maybe pushing slightly lower again. But anyway, if we go to the daily time frame, what I am happy to see is that we have seen the price of USD CAD come back here, and we've had a monthly high situation happen where the price has taken a previous month's high. So for me at the moment, I was going over to the H4. If there isn't any market structure break, and this is a key here, now this week has opened up, taking even the high of the last week here. So we have a weekly stop hunt and we have a daily stop hunt or monthly stop hunt. However, if the price, which at the moment, if I look at US oil from here, is entered into the supply area here, like so, it is taken all the swing lows before the movement happened here, and it's kind of done the perfect entry for a short. So if he actually is going to sell off, then USD CAD should be, if USD CAD is going to sell off, then US oil should continue going long. Okay. And I might test this out with a little trade. So I'm probably throw a little trade on there. Give me a second. Let me throw one on. And let's just see if the price actually obeys or follows that move. See if it does work. I'll just put my stop loss above the high and just let it run. If that does work out, then that will be a fantastic kind of move. But let's see what happens anyway with that. So, yeah. So with anything, I've taken a sell on USD CAD based on this. And if I'm right, then that means USD CAD should be dropping down most likely to the nearest weekly low. And there's two of them nearby, so probably here. So on the other side of things, US oil, let's go over to the daily time frame and see. Now, if that's the case, then US oil should be going long at some point. Okay. Now, with me, US oil has been a kind of love-hate relationship. I do expect US oil to continue to sell off. For those of you who were around or trading during lockdown, especially my academy students, you'll notice that we traded, US oil all the way down when it crashed, which was fun. But we also traded it long. And one of our craziest students turned £11.50 into 2,500, which is crazy. All right. So now, anyway, looking at US oil from the monthly time frame, it's been a bit of an interesting one. We've had the body of the candles to the right here close beneath the low of the previous year, which is a significance, means that we should be looking for a bearish move. However, for me, the threshold of bearishness is going to be when the price closes beneath this demand zone, or if it does. If we get below this $60 back mark, then we're talking business. That will be something that would be a consideration for us to look for a very strong sell to come in. Now, for those of you who were trading anyway during 2020, there's lots of liquidity gaps, even within the wick, that never got filled out. Quite big ones that are obvious to see as you go down in lower time frame. So I always suspect that there's probably going to be another movement like that pretty soon. Maybe when they unfold green energy to the world and you don't need a petrol car or anything anymore, then the price of oil will become cheap. I don't know, something crazy like that. But anyway, looking at this, the high of the year so far, the price has come very close to the high of its own year, which might actually be a move that can push the price to go for another long. To go for a continuation long. I say this because I'll show you what I'm looking at here. Looking to the left for supply right here on US oil. We have a demand order block that's formed above here. And then we have this major stop hunt movement here, this induction here, right over here. Now, after that move, let's go to the H4 to have a look here. So this is the movement I'm talking about right here. We've had a break of market structure right over here. And if to be fair, if oil is going to do any sort of selling, it most likely will be for an order block kind of move. Now, I need to take off the period separators for you to see this, but this week we've slightly opened above the previous week's high. This is the move, very, very small movement, so really insignificant. But if the price is going to do anything with oil, it will be something like this, so continue for a long. Okay, but I actually see that oil should be continuing for a long. Another thing is that this supply order block that the price is in at the moment, the price is closed pretty deeply into this area. So unless oil is going to do a move very soon, then we should be seeing the price break above here. Zooming out a little bit more with oil, we also have this situation here, which is we have a very huge liquidity gap that's still not been filled. We have one here and we have another one at this supply zone at the last major induction, which is a monthly one here. So there's actually room for oil to continue pushing up in price. And to be fair, if the dollar is going to become weaker, then it should cost more dollars to buy oil. And that's really the matter of the fact there. So I'm actually looking for a further long on US oil, and then after probably a short afterwards. Okay. So this is my kind of setup that I've got going on. This is what I'm looking for with oil and with gold and with the rest. And this is why my view on, oil and gold is the way it is, and all the other commodities as well. One more very strong bullish move before a very big sell-off. Okay. Now that we have all of that out of the way, let's have a look at some other pairs. Now, the last thing I wanted to leave you with is obviously I want to start looking at the US index a little bit more. So I'm going to go over to the US 30. So let me grab the US 30 here, bam, and let's do this. Let's go over. Now, I really do like the US 30, and the algorithm that I've developed, the robot I've built, has, so many great features that I want us to kind of take a look at later on. And I'm going to leave it there for you guys to see what it can do later on. I definitely do want to go through that. So I am going to put some info. But anyway, let's look at the US 30. Now, the US 30, I made a little mistake when I was talking to my friend, but I realized my mistake. Now, when the US 30, when the dollar is losing strength, okay, when the dollar is losing strength, the US 30 should cost more to purchase, because this number here is the weighted mean average of the top 30 stocks in the US. So add all their prices together divided by 30 gives this index, which helps to give a very clear key to how strong the dollar is or how strong the US economy is. So, for example, as this number is going up, it means the dollar is getting weaker. So it costs more to buy these same basket of currencies with dollars specifically. Now with the US 30, I believe a very strong incoming short is coming soon. All right. And I'll show you why. Now, obviously, the US 30 over this long period of time, you can see that there's a very obvious bullish movement going on. But there's still some unfulfilled efficiency that hasn't been dealt with on the US 30. And I do think that sooner or later, the price will deal with that. Now, the first major one is here. And if I use one of the most key swings that we can use in this trend, it will be the 2020 crash swing, which is right here, where the price pulled back over here. So if I do this and drag this up here, all right, we had a yearly induction move that came in the year 2022. The price took the high of 2021, and we had an initial short. Now, this initial short is powerful because it broke market structure right over here. So let's go over here. So I'm going to take this off, and let's see if I zoom in one time. Yeah, if I zoom in one time, it actually looks pretty good. So here's the movement. So type 1. So we say yearly induction. So yearly induction. So I'll just call it induction here. All right. So that's the yearly induction that we have here. Let's go over here. And then we have the break of market structure, which is right over here. So I'll just call it MSB for short, break of market structure. And then let's put here a supply zone. So if we draw this supply zone over here, right? As the price has gone into this area, and I'm going to draw this dollar index or this Fibonacci like this so that the lines are not in the way. Right now, we've come back to this key supply order block here. So return to origin, which I call an RTO. So just put a return RT. Sure. Right. Now, the price doesn't have to go all the way short, but I do expect it to come back to the equilibrium point because we haven't had that movement yet where we get the fair market value for this range. We haven't had that fair market value return. So I'm actually looking for the price to do something like this. Now, if I take another US 30 chart here and we look at this in a bit more detail, so lower time frames, let me just take this over here. Right. Now, don't get me wrong, because there are many different ways to go for it. This is one proposal. The other thing just to point out is that we're in 2023 now. So the price could decide to take the high of 2022 and then do this move. Okay. I still expect it to happen somewhere within this range, but if it doesn't, that's fine. All right. Now, if we look at the weekly now, you can see this move in more detail that we have many, many highs. All right. But I'll mark out the major two. We have many highs here. And now these highs over here that haven't returned to this supply zone yet. Okay. Now, on Hugo's way, it gives us information here that we have a liquidity gap, one here, and more importantly, one down here, right by this equilibrium area. So I know that a massive sell-off will soon come down on the dollar index, you know, in the near future. You know, so even with the swing for pound USD and all the rest, I do expect the price to go along, but the dollar index is going to be a key factor for us to watch out for as well. So let me put this, reconfigure this better. All right. Now, with that, let's go down more to the daily time frame and have a look. So on the daily time frame here, the weekly area I'm looking at doesn't start until this point. On the daily time frame, it's around in the same area, in the same kind of range, right over here. So for me, at the moment, with what the dollar is doing, this sharp move we have with the NFPs and then the price going long, I do expect the US 30 to probably continue going long. But when it gets into this area in the blue, this is where I'm going to be watching to see if we get the sell from here. Now, of course, we do need to match this with the dollar index strength, because if the dollar index, okay, starts to push, if the dollar index starts to get weaker, for example, then we should be looking for like, you know, major movements. So let's say, for example, let me get this here. If Euro USD, gold, they all start moving along like they are now, then that means that the US 30 will move long. But the moment they start to reverse, which means the dollar gains strength, then we should be looking for the sell. So this is my final analysis for today, that I really am very interested in the US 30. I think it's a fantastic pair to make profit on, and it's a great, you know, opportunity to, it gives us great opportunities to do that. So I'm gonna put this here. Now, of course, with the US 30, it does have a high pip value, especially for something like Hugo's way. On Hugo's way, 0.01 actually means 0.10 in terms of pip size. So if you want to trade the US 30, all right, one lot is basically like 10 lots. But if you can imagine if you put this move today alone, just from here to here, if you put one lot, if you put 0.10, you would have had $2,140. If you put one lot, that would have been 100 times that. So that would have been 21K just from this move alone. So you can see how good the opportunity is. And if you put a stop loss beneath this low here, that would have been a $1,451 stop loss to make 21K. So you can see why the US 30 is something to trade. Now, there's an obvious liquidity gap over here. So if it was to trade this, if this was me, I may probably come out over here first and then look for another trade up here, because that would have been $39,200, which would have been a great start to the week, especially if you've got a funded account in your life. That would have been a dream come true, right? So anyway, looking at this, you can see that there's a lot of opportunity in the US 30 because of its volatility, and, you know, it'll be worth trying to capture that movement wherever you can. All right, so that's it from me today. I'll catch you guys tomorrow again. I was a little bit late on because I had some stuff to do with the students, so but we'll